Folks, welcome to the Contrarian Trader. Today we're going to go over a few of the questions that I received from people, members and non-members alike, about how I am looking at the markets overall. I've been making some fairly bearish calls. On September the 20th, I posted a bear market looms and we saw an 8% correction on the overall markets. On November the 22nd, I posted anatomy of a bear market. These are all posted on YouTube, Twitter, on my website, etc. And on December the 12th, I posted Facebook breakout or correction. And I mentioned a number of the pop culture names, Netflix, Tesla, etc. And I'll go over those names as well, and I'll outline why they ended up on my radar screen and why I became overly bearish on the stock market after a quiet period. I wasn't posting all that much. I was just sitting and watching. But folks, before we get into the video, if you get any value out of these videos, please get alerted in the future by following me on StockTwits and Twitter. If you're watching this on YouTube, please subscribe to my channel, leave a comment below, and I will definitely get back to you. And if you're watching this on the website, enter your email address. You'll get an email of new videos when they're posted. You will not be spammed. We hate spam too. Let's get to it. S&P 500 on a weekly chart. Very, very valuable chart. And I was bearish on the overall markets back here in the beginning of the year. You can go back, take a look at the post. It was always an air of doubt about the health of the overall markets. And you could see that all year long. We're almost near the end. I can't believe it. The RSI trended down. Now you might say you must have had a bad year. We had a great year, trading both long and short, because we did see some volatility despite the fact that the VIX has been near all-time lows. So we had a downtrend in RSI, yet the S&P 500 continued higher. And what makes me all the more cautious on this stock market is that we have failed twice on the S&P 500. And here's what I mean. Here's our uptrend channel. In solid blue line chart is the upper band. In lower dotted is the primary lower band of the rising uptrend channel. You've had a more consolidated parabolic move higher with an intermediate uptrend, which was expected to be broken. You would not want to short the market on a break below that. You'd always want to go back to your primary uptrend channel. Within the past quarter, we have closed down below this lower band, the primary lower band of the rising uptrend channel, twice. And each time when we rallied off of this lower band, we have failed to hit the upper band. It's a loss of momentum, and we are now breaking down once again. And now on Friday, we have now completed a breakdown for the second time below the lower band. So the S&P 500, along with the Dow Jones Industrial Average, the IWM, which I've been obscenely bearish on for quite some time now, are seriously breaking down. And I will be going over the charts of all the indexes, the sectors on the week ahead commentary with my members, plus our portfolio and the stocks that we're looking to trade. And that will be going out to members later on this weekend. 2 videos. Okay, so let's get to the pop culture names. Whenever I see action like this on the S&P 500, a very strong parabolic move higher and then a break, I take a look at the pop culture names and I take a look at Netflix. How is it performing relative to the S&P 500? And you can see that Netflix has been extremely sloppy. It's been trading in a trading range for quite some time. It put in a final high back in September. But the problem with this breakout here above this support level is that it failed and it broke down. It's a breakout point failure. And generally, when you break out of a resistance level, consolidate, and then roll back down into that trading range, the prior trading range, you will, at a bare minimum, retest the lower band, which we did in October. And in all probability, we will roll over once again, putting in a lower high and break down below the prior support level. It happens all too often. And when you see the RSI diverging, making lower highs while the stock tries to make higher highs, it makes this breakout all the more improbable of succeeding. So Netflix, I think, is going to break and head considerably lower. Amazon.com. Yes, it has a PE of 300, But that is not the reason why I'm bearish on Amazon. That argument about using multiples to short stocks ended for me back in 2000. It's a fool's game. What you need to do is watch the charts. And what Amazon has been telling you all year long is that it is weak and it is getting weaker. It's been in a flag formation. Each time we've hit this lower band, we've rallied up to the upper band. One might call it a consolidation, which is fine. Now, when all is said and done, Amazon.com may be in a trading range, but it has certainly lagged the S&P 500 overall this year. And I bet you if you asked a man on the street, how is Amazon.com doing? Because everybody shops there, he's probably going to say pretty darn well. They're not. Their stock price is very, very anemic. Could be the pause that it refreshes a year-long consolidation. If we pull back and retest this lower band, perhaps it'll rally. But I predict that if the S&P 500 continues its breakdown, the high beta names, the high volatility names, will probably follow suit, and we could see a break below this support level. Tesla. The RSI has been diverging from price performance for over a year now. While Tesla's made higher highs, the RSI has made lower highs. And finally, we broke down below the lower band of this rising uptrend channel. We broke down below 217.32. Next support level is 200. If we break that support level, we're heading down to 177. Now on RSI, you have the oscillator leading price performance. What does that mean? It means that we were in a trading range, independent formation, and we broke down below the lower band. We haven't done so just yet on Tesla, but I would expect that as the market continues to break down, that Tesla will follow suit. Now, let's move on to GoPro. IPO'd for a couple of quarters now, and you could see that it is breaking down. The market sent the signals back here. It pulled back, retested support seen back in September, rallied up to the upper band, put in a lower high, and now is failing on a weekly basis. We have a bottom tail, which might imply some support here. If you see a continuation breakdown below the lows last week of 57.92, we're probably heading down to put in a retest of 52.83. Now, Facebook, yesterday I mentioned, and there's a huge following, a cult following of traders of Facebook, longs who love it. Whenever I mention anything bearish, I usually get one or two bits of snark, I'll put it that way. And Facebook, I'll note up front on a daily chart, is breaking out. It's behaving well relative to its pop culture peers, and it is behaving well relative to the S&P 500. However, what I will point out is that we have the potential here for a head and shoulders setup. Left shoulder, head, right shoulder. You might even want to call this the right shoulder now. And despite the fact that we have broken out, we are seeing topping action. We are seeing sellers come in and sell into strength. Now, one might say that it's these folks back here who bought, who got hurt, and are now looking to get their money back. It could quite possibly be. So would I go shorting Facebook just based upon this topping action and the possibility of a head and shoulders setup? No way. What I'm looking for is a breakout point failure. And that is if we see Facebook stock roll over and collapse back down into this prior triangle formation. And in all probability, we will retest the lower band, and there's a very strong probability that we will break down below the lower band and begin to play catch up with the pop culture peers and the S&P 500 if they continue their breakdown as well. On a weekly chart, the weekly chart looks overall good. However, we had a breakout point failure in October. We had a breakout in early October or mid-October, and then in the latter part of October, we broke back down into this trading range. The stock pulled back, consolidated, attempted a breakout. It failed, pulled back. We attempted again last week. It failed. And we need to watch our volume. Volume to the upside is well below average. So if they rally this through this upper band on light up volume, the probability of it failing is pretty good. And if it does fail, watch for it to take out 72.51 or 70.32, which marks the lower band of the current trading range. The final bit of warning I'll have on Facebook is that the RSI is leading possible price performance. We have a breakdown in RSI below the lower band of this pennant formation. So the markets send us signals. I take issue with those folks that say that the market is rigged, the small guy can't make money. I don't believe that as long as you are using multi-period charts. What does that mean? It means that you're using daily, intraday, weekly, monthly charts to come about your trading decisions, and you're disciplined in your approach. If you're betting that you're going to get a great stock pick out of Jim Cramer or whomever, the probability of them giving you a bad pick is fairly good. You need to do your own research. And that's what I do for my members. And every once in a while, I'll put out these videos. So if you get any value out of these, please subscribe to my channel. If you're watching this on YouTube, leave a comment. If you're watching this on StockTwits or Twitter, please follow me. And if you're watching this on my website, please enter your email address and you will not be spammed. You'll just be alerted to when I send out these videos. And I wish everybody the happiest of holidays, Happy Hanukkah and Merry Christmas, Happy New Year. Be well. And if you have a comment, please submit it. I'll be more than happy to get back to you. Take care, folks.